Yo, what's good, family? It's your boy Takir back with another video to share with you guys the importance of inverse correlation or just correlation in general. Now, what is correlation? Correlation is basically a way of saying that certain markets are either completely identical or completely opposite, okay? So for example, over here, we've got the DXY, also known as the US dollar currency index, which is a measurement of the US dollar's strength or weakness. So as DXY goes up, the value of the dollar goes up. As DXY goes down, the value of the dollar goes down. What this means is any pairs that actually contain the US dollar are either correlated or inversely correlated with the DXY. So USD CAD, USD Chef, these pairs are literally almost identical to the DXY. And anything that is inversely correlated, like Euro USD, AUD USD, GBP USD, these are completely opposite to the US currency dollar index. So what that means is this. If we can analyze the DXY properly, we can look for trading opportunities within the dollar pairs, okay? So check this out. I've got a nice little distribution schematic over here. So we have our buying climax over here. How do I know that's the buying climax? Well, this was the final sell to buy that led to a break of structure. Okay, as you can see, we had lower highs, lower lows, and then finally a higher high over here. So therefore, that is our buying climax. So price climaxes comes back down for the automatic reaction over here. Therefore, we've identified our two ranges. We got our first up thrust over here where price leaves the range, okay, and I believe it reacts. Okay, cool. It reacts off of these buy to sell candles over here. And then we have our sign of weakness. Okay, so this is the first indicator. This is a distribution schematic. All right. And then we come back up again for the UTAD, so the up thrust after distribution. And I believe it reacts off of an IPA fill over here. And then it comes back down and then it does its test and then the LPSY. Now, even if you missed the UTAD, the test, the first LPSY, if you could have noticed the second LPSY, you could have got in on this IPA fill. This is what I actually noticed myself. However, even if you missed the final LPSY, within the move itself, you can still catch a retracement entry. Okay, so I'm going to show you exactly what I mean. So look at this picture right here. Okay, look at it, memorize it. Now check this out. Boom. It's the complete opposite, right? This is the Euro USD market. So as you can see, it's like the market has basically flipped over. Okay, so this time it's an accumulation schematic, right? So selling climax, automatic reaction, secondary test, spring, test, LPSY, final LPSY. Now, let's get back into the LPSY. In this case, we're looking to buy, right? Well, check this out. The complete swing of the LPSY starts from the bottom to the top. Okay, now if we dive into the 5-minute time frame, what you will notice within the spring is that what we had here was lower lows and lower highs. And the first higher high, right, took place here with this wick. Well, which candle led to the break of structure? That is the question. If we look at the line tool, we can see break of structure took place here. Okay, so which candle was it? Well, it was this order block, right? This sell to buy candle led to a complete break of structure and we started our uptrend. Therefore, the sell orders are trapped within this area. So when the market does take its retracement, as it does, you can see that when we place an order based off of the sell to buy candle with a stop loss just below, we can catch a really nice entry. I caught a nice 2.2 pip SL entry, okay? And funnily enough, it actually lines up perfectly with the 71%, which is a very nice discount level, okay? And then we got our nice reaction, stop loss below the wick of the order block. Reason being, why didn't I put it lower? It's because our POI, our point of interest, is the order block itself. We're expecting the market to react at that level, okay? And so therefore we ride this move. In terms of TP, what I'm looking for is to take it to at least the top of our range, okay? Which gives us a very nice 1:36 risk to reward ratio, which is beautiful. And even if you guys have missed this trade, as you will see, if the structure breaks this high and it goes for another bull run, there will be another retracement where you can line up another fibs with another institutional candle and then look to re-enter the trade, okay? Because we've still got a very, very long way to go. I mean, we're looking at 80 pips. We've only really covered halfway, okay, realistically halfway. So with that being said, I hope that helps you, especially understand the value of correlation and also the value of, you know, smaller time frames, getting in on retracements as well.